Welcome back to the Finance Corner, where we got the next video in our series of flipping money slowly with the options wheel. So let's get right into it. So this is gonna be a quick update, honestly. So we made another play, and the last contract we made expired, and we're going to talk about that. But so this is where we at total with our money. Um, Basically, we're down on calls. We're down a quite a substantial amount. So let me talk about that real quick, and then I'll explain the strategy we're working around with here. So basically, with calls, you know, after a series of running the wheel, we got our cost basis down at $19. So you see those 300 shares we have right here. We got that for basically $19. So we're gonna take our handy dandy ruler here, measure that down. So we're actually technically down like 32% on that currently for the shares. So it's all good though, because we don't mind. It's just shares. We can hold it, and then when it goes back up, we'll get our money back. But it does tie up our money, unfortunately. So what I've been doing is I actually activated a bit of margin, and I had some money left over, and I said I was going to run the wheel on um, another asset. So we actually ran the wheel on UUUU. Um, I have about, I think it's about maybe 2,000, or roughly around 2,000 in cash, but as you see, our buying power was much higher. Um, I actually sold a UUUU put, $18, 5.50 strike price for expiration date of yesterday, and we got paid a premium of 130. So see that here, we got our credit. Now, here's the thing. We can actually talk about this real quick. I could have actually got the whole entire premium, but instead, I actually got only about $45 premium. So basically, what I had to do, because by the time it was about to expire, which was yesterday, this stock is extremely volatile. Um, so basically, it had extremely high, the options had extremely high implied volatility, pretty high delta, and so the price of the contract changes very quickly. By the time it expires, though, is what's most important. But basically, before actually it expired, let me talk about what happened. Where I could have actually closed the trade in profit, but it decided to reverse on me. So there was a time where, remember, my strike price was only 18.50, and I could have closed it when the price went all the way as high as to, so on Wednesday on April 1st, you see here, actually kind of highlight this. I'm looking at right at the top of this wick here is where you see the price went as high as 1966. So that is a good dollar and change above my strike price, which means the strike or the premium was a lot cheaper for that contract. So basically, I could have closed that trade early and collected some, like maybe 80% or 85% of the profit. And I honestly should have did that, but I was like, nah. By the time it expires, I thought this was gonna continue. Can by the time it expired, it'd be above $20 or something like that. But as you see, it came back down and actually expired out of the money. So if I didn't close that trade, it would have assigned me, but it would have been around the same cost basis when you take into account premium. So I was just like, I don't really want to get assigned more shares, so because we're already holding cold shares. The whole point of me playing around with these is really to just generate some income on the side. So again, we sold that contract at dollar 130 basically, and then we had to buy it to close it for $85. So you do $130 minus $85. That's my total profit, which is about like $45. So or really 45 cents in options terms. And that's basically where we're at. So you can see all these canceled contracts here. I was basically trying to get paid a higher premium. See here, I was trying to actually sell it for 65, and I seen that wasn't working, so I tried to sell it for 70. That wasn't working, so we ended up getting filled at 85. So it is what it is. We're gonna look at some more contracts, and I'll make a play soon. Today's there's aftermarket on Friday, so we're gonna see what's going on Monday. Maybe get some nice premium, and then keep it going with that. And that's pretty much where we're at. That's pretty much where we're at with this account, and that's pretty much the goal. You see, you have a lot of buying power. I'm not going to use all of this margin. It's kind of crazy. Don't want to be put in a situation where we're over leveraged, but we're going to slowly play around with this account using options and grow our income. So we'll be back next week for the next update. And until then, see you soon. Thanks for watching.